For the last few days, I've been telling you about this sea change in the market, where a weakening dollar, among other things, is bolstering the stocks of U.S. companies that do a lot of business overseas. Which brings me to Eaton, ETN, a classic industrial with huge industrial exposure that manufactures electrical control products, power management systems, hydraulics, truck transmissions, and aerospace systems. Now, I've liked Eaton for ages, liked it so much that we own it for my charitable trust. You can follow along, actionalertsplus.com. And last night, Eaton reported a pretty darn solid quarter, delivering a 3-cent earnings beat off a 98-cent basis. Some people said revenues came in light. That was all Forex. Company is facing some serious strong dollar headwinds, but they managed to offset this through a combination of cost controls and improving margins. Witnessed a 140 basis point increase in gross margin. Hey, plus Eaton's paying you bountiful dividend, 3.2%. So let's take a closer look with Sandy Cutler, the chairman and CEO of Eaton, and a real straight shooter who consistently comes on our show to talk about his results, good or bad. Mr. Cutler, welcome back to Mad Money.
Good evening, Jim. Good to be back with you tonight.
Thank you, Sandy. Sandy, two big segments, electrical products and electrical systems and services. They both had fabulous marches. We've heard a lot of companies that didn't have a good March. What's your company doing different than the other guys?
Well, I think as many companies, and we too, experienced a pretty slow January and February, particularly here in the U.S., and we were really pleased to see it recover in the third quarter, or excuse me, in the third month of the quarter. You know that we obviously have been completing the integration of Cooper. We're really delighted with the front-end synergies we've experienced, a positive response from our customers, and I think that was evidenced as we saw March come together in a very strong way, up some 12 to 13% in bookings in the month of March over last year in our electrical businesses.
Now, Sandy, a lot of industrial companies, after they reported, took down numbers pretty big. You were, I thought, somewhat bold. You really pretty much left your numbers intact. Is that because you saw good momentum in April, or is it because you think the dollar may have peaked?
Well, our view was that really the only substantial change we saw was really in FX, which will be a little bit more negative this year, but a pretty minor adjustment, as you mentioned, really down to where consensus was. We remain confident that our combination of new product introductions, the $150 million of additional synergies we're getting from the Cooper acquisition this year, plus $35 million of benefits from restructuring we did in our industrial segment last year, and then just the darn good cost control that our team has exercised around the world are going to allow us to continue to drive record results this year.
Sandy, I've not talked to you enough about innovation because you're doing a lot of it. I thought, and when I looked at your analyst day, the most impressive things you're doing, broad and deep presence in all areas of lighting, which turns out uses an awful lot of energy. Can you talk to us about some of the products you've introduced just in the last 2 years that are making a difference to your bottom line?
Yeah, one of the real benefits of the Cooper acquisition is we're now in the lighting business, and as you know, that's a very big user of energy in commercial buildings and many other types of installations. We're a real leader with the LED technology. I think one of the biggest technology innovations I've seen since the PLC replaced relay panels back some 40 years ago in the electrical industry. We really have introduced that across the spectrum. We're really quite pleased with a new introduction, even in this last quarter, something we call the Night Falcon, which now brings LED lighting to outside architectural lighting, which has traditionally been the provenance of metal halide or high-pressure sodium lighting. Just another example, we think that this whole industry is going to convert to LED. It's over 50% of our sales in lighting are now LED, some categories as high as 70%. We've raised our investment after we bought Cooper in this area, and I think it's just another reflection of we're interested in investing in areas that create above-average market growth through really unusual energy-saving opportunities for our customers. You
were very bullish in both aerospace and trucking. Feeling good about those because of long-term secular trends?
Yeah, aerospace, as I think we've all seen, the narrow aisle in particular, a growth in commercial transports continues to be strong from the big majors, and we're seeing year-over-year increases in line rates. So very strong driver there. We're pleased that the tenor of aftermarket is also stronger. And then, as you mentioned, in the North American vehicle markets, be they light vehicle or heavy-duty truck, conditions are really quite good. We think on the NAFTA heavy-duty truck side, we may see production rates in the industry be 330,000 units, which would be a high since many, many years ago. So some pretty good conditions in the U.S. Same picture outside the U.S. Things are slower there. So that trend hasn't changed much over the last 2 years.
You are seeing not big infrastructure projects, but non-residential and residential being good, other than Martin Marietta Materials. Again, I think that you must have a very good book of business because I'm not getting a similar read on strength. Is it just you've got certain products that are selling right now into resi and non-resi that nobody else has?
Yeah, I think, resi's been a little bit choppy depending upon the month, but again, we think lower oil prices are good for residential. It gives people more money for mortgage payments or considering starting a new house. We've seen that whether it be our lighting products, as I mentioned, LED also goes into residential, whether it be really some of our leading technology around combining both short circuit and arc fault protection for homes. We've got real leading products there. On the non-resi side, again, the light commercial side, the institutional side, the wastewater treatment side, all fairly active. What we haven't seen are the very big industrial projects, and that's where the softer side of non-res has been here in the U.S. so far.
Finally, auto. You seem pretty bullish in your outlook for auto, too.
Yeah, I think particularly here in the U.S. where, back in the 2008, 2009 dark days, many people wondered whether we'd ever see this market get back up to 16 million units. We've got our head over 17 million. We're quite bullish, again, about some of the technologies we've introduced here that continue to help with fuel economy as well as emissions. And those are two of the real key drivers in that marketplace. So pretty healthy market conditions here. China's been pretty healthy on the vehicle side, the light vehicle side, car side as well. The disappointing area in these vehicle markets is South America, where clearly the economies are in much more trouble than people had anticipated just 4 or 5 years ago.
Well, on a down 1% to 1.5% day, and everyone's so gloomy, I want to thank you, Sandy Cutler, for coming on, setting us straight. Chairman, CEO of Eaton. Not everything's that bad out there. Thank you so much, sir.
Thanks, Jim.
Okay, look, everyone wants to just sell all stocks. Does that really make any sense? Let's just stay calm, ride through this. Mad Money's back in the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.